What's up, you guys? How to make unlimited money as a life insurance agent. First off, you need your life insurance license. So whatever state you're in, you do got to go through the process of getting your life insurance license. Now you may be thinking, what company should I become a life insurance agent with? Well. You know, the best company to go with, in my humble opinion, would have to be World Financial Group. And that's just because you get access to hundreds of different carriers. So it's like, why apply for just Transamerica or why apply just for Nationwide when you can work your own business, create your own business, and partner with these different companies. And that's essentially what World Financial Group is. It's a life insurance agency where we partner with all the big life insurance companies and help people get life insurance. Now, let me talk to you guys about this presentation here. The power of choice, like I was just discussing with you. Transamerica, Pacific Life, Prudential, Everest, Nationwide, Allianz. We have hundreds of different carriers that we can choose from. And we offer products such as fixed index annuities, life insurance, long-term care, college plans, index universal life, which is like your retirement plan on steroids. Get rid of that 401k. We do 401k rollovers. We do IRA rollovers. The 401k, many hidden fees, heavily taxed. It's going up against the stock market, so there's ups and downs. You could make money, but you could also lose money. And these days, in these times, in these markets, you're losing money with the 401k. Index universal life is essentially a bank account on steroids. You invest money into it each month. Now, you could put in as much as you want, but you have to be consistent. So you can put in, depending on your budget or whatever, you could be putting in $25 a month, or you could be putting in $10,000 a month. Now you can't start off putting $25 in and think, oh, I'll put $10,000 in this account, because there are levels and there are different accounts based on how much you can afford. So it's really to help you. You get the life insurance component. So if something happens, you get the death benefit and everything. But let me break it down for you. The rule of 72. I'm not sure if you know this, but Albert Einstein created the rule of 72. You take the number 72 and you divide that by your compound interest rate. And that's how many years it will take your money to double. Now, let's get back to it. Now, you see, if you had, first of all, the banks, Chase, Bank of America, Wells Fargo, it doesn't matter what bank you have, you're getting like 0.00001% of your money. You're not getting nothing back. So let's just say, your bank was being generous and it was giving you 1% back. You take that number 72 and you're going to divide that by 1%, and you're going to see that, let's say at age 29 you had $10,000 in your bank account. It's going to take 72 years for your money to double. So by age 101, if you never touch that $10,000, it will miraculously grow to $20,000. Now, can you retire with $20,000, especially at age 101? No, you can't do anything with that. It's useless. And people are, putting their money in savings accounts in their bank account, and it's not doing anything. It's just staying the same until you put more in. Each paycheck you get, you put a little into your savings. You could be putting that into your retirement plan, aka your index universal life. When people put, oh, part of my paycheck goes to my 401k. Yeah, your 401k that's betting up against the stock market, all those hidden fees. If you're trying to pull out money before your age 60, penalty, California tax, or whatever state tax you have, whatever state you're in, you're going to get taxed. And there's federal taxes. So there's a bunch of increments on you losing money with the 401k, and it's just not safe. You can't retire with that. Now let's say you had an account at 4%. Okay. Now your money's doubling every 18 years, which is a lot better, but still, it's not, what I'm saying, it's not given. Age 65 or 40,000, if you know what I'm saying, started at age 29 or whatever age, but you only had 10,000 in 18 years, it will double every 18 years because you're taking the number 72 and dividing that by that 4% if your account was getting 4%, but no bank account was getting that. Now, you see the 6 and the 10%, Index Universal Life, IUL for short, Nationwide and Transamerica, their IULs are averaging around 10%. So let's take a look. Now your money is doubling every 7.2 years. So age 29, you know what I'm saying? So you had that 10,000 in your account, in your IUL account. By age 36, it would have already doubled to 20,000. Then by age 43, it would have doubled to 40,000. Age 50, it would have doubled to 80,000. Age 57, you're at 160,000. Age 65, which is retirement time, you got 320,000. Now, that's more something that you can actually retire on. And that's just, if you had $10,000 in your IUL account at age 29 and you didn't even touch it after that. The money just doubled every 7.2 years. Now, this is how the rich are staying rich and the wealthy are staying wealthy, because they have accounts like these. Life insurance on steroids, Index Universal Life. So let's say this was in your policy value. Now your death benefit may be way higher. Your death benefit may be $500,000. It might be $1 million. And then let's say you had about 320,000. Let's say you had about 320,000 cash value in your policy. Cash value meaning that this is what you put in and this is what you can pull out. Now, you don't have to withdraw your money. You don't have to call Nationwide and say, "Oh, can I withdraw 50,000?" You can call up Nationwide and be like, "Hey, Nationwide, I have about 320,000 cash value in my policy. I'd like to take a loan out of my death benefit for 50,000. And now your 320,000 cash value will remain, and they'll pull the money out of your death benefit." Special hacks with Index Universal Life. This is how the rich are staying rich and the wealthy are staying wealthy. This is how they pull out loans and start businesses that they don't go into debt from going to a bank and asking for a loan, and they're going to charge you all this interest and you're going to have to make payments on it. No, you don't have to do that with this. So, there's 3 ways for your money to grow. Fixed, and you know what that is because we talked about it. It's your bank account that you have, your Chase account, your Bank of America account, your Wells Fargo account, your Navy Federal account. You're not gaining any money when you put it in your savings account. The only time the money will grow is if you physically put more into it, you physically get money deposited into that account. That's the only way it's going to grow. Variable, that is your 401k. Looks like a heart attack. Like I said, you can make money with the 401k by putting your part of your paycheck in there and then hoping that the stock market goes up and that your 401k goes up. But also, if the market crashes, your 401k is going to crash and you're going to lose all that money that you have in there, and it's still going to get taxed and it's still going to get penalized. Indexed, it kind of resembles the variable, but you're locked in the gains. So when the market is doing well, you're constantly gaining. And let's say the market completely crashes, you're not going to lose anything. You're going to be locked in where you're at. because you're umbrellaed under life insurance. And not only are you umbrellaed under life insurance, you're going to be able to pull that money out tax free. And I'm going to teach you that right now, because tax now, is your savings account, your regular bank account. Your money gets taxed, you put it in there, and hey, tax later. So tax later, your 401k, while you're putting your money in there, it's not taxed right away. So let's just say you miraculously had $1 million in a 401k account. When you're ready to pull that out, you're going to get taxed on that entire million. And what are you going to be left with? 700,000, 600,000. And then remember, if you're not age 60, you're going to get penalties. There's still federal taxes on it. This is just state taxes we're talking about here. And tax advantaged, cash accumulation in an insurance policy. So you get taxed on your initial seed. So what you put in will get taxed. But your harvest, you get that tax free. So if you end up having $1 million in your IUL, you get to pull that million out tax free because it has already been taxed. And on top of that, your money is already doubling and tripling every 7.2 years. So you can only imagine how the wealthy stay wealthy. Walt Disney started Disneyland and Disney World through cash accumulation and insurance policies by taking out a loan against his own life insurance policy. That's how he started Disneyland. That's how he started Disney World and built one of the biggest empires in the world through life insurance. And that's all I'm going to show y'all. But life insurance is super important. That was just the IUL. You might not be ready for the IUL. You might not be able to make a consistent monthly payment if you're trying to really grow and elevate your wealth. You should be, what I'm saying? But if you are interested in IUL, you need to be working. You need to have a job, of course. You got to be healthy too. There's medical requirements. Not everybody gets approved. If you got a bunch of medical illnesses or you got a bunch of things wrong with you medically, you could get declined just for being a high risk or whatever, because it is life insurance. But also, if you're just looking for some quick life insurance, I just recommend you starting off with an Everest account, because that is a concierge service as well. So you can design and customize your own funeral, and it pays for your funeral. So if nobody knows when it's your time to go. So if you do happen to go, you know that your funeral is going to be paid for and taken care of. You know that nobody's going to have to make a GoFundMe for you, and you're going to have money left over in that death benefit to give out to your loved ones, so they're not going out empty-handed and having to pay for your funeral. So take care of business. Everest policies are super cheap. You can get them from $10 all the way up to $100, depending on how much coverage you want. But super important, because if no one knows when it's your time to go. But with Everest, your loved ones will get paid within 48 hours. So it's a super quick process. But if you're interested in generational wealth, you want to have a healthy, happy retirement, Indexed Universal Life is what you need to be looking into, because that can change your situation, your retirement, your family, your future, and it's a protection plan. This is the new life insurance. It's not all traditional life insurance. So whatever your death benefit is, you know what I'm saying? Let's say you do get sick. Let's say you have a stroke, heart attack, cancer, anything like that. You can access the money in your death benefit and pay for your medical expenses. You might not have known that, but you can do that. If you have the new life insurance, Indexed Universal Life, you can do that. You can do that with the Everest policy, but it just depends on how much coverage you have with Everest, because the death benefits are smaller than an IUL. But you can get an IUL with $50 a month. It's not going to be as much coverage as someone who's putting in $1,000 a month, or $300 a month, or $500 a month. There's levels to it. There's levels to it. But if you want to make some serious money, it's not you make it quick. You know what I'm saying? You're investing and you're saving for retirement. So it might take you 10 years, 15 years, 20 years. And you might make, a couple million just off compound interest. You might have put in 300,000-400,000, but ended up getting like 1.8 million just off of the compound interest in the Index Universal Life account. So, it's very important to be investing correctly. But also, to invest correctly, you have to have the information. So this is what I'm doing. I'm giving y'all out the free information. If you want to learn more information, hit me up in the comments and I can help you out. I'm in California, so if you're in California, we can do some work. If you're in a different state, we can still do some work, but I might have to send you to some other agents that's in your state. But if you just want, if you just want to better your finances or whatever, and get some protection as far as getting the Everest policy or Index Universal Life policy, be in California and we could work. But also, if you're looking for a job opportunity, hit me up in the comments, and it doesn't matter what state you in, I could hook you up and get you a opportunity. It's basically you starting your own business, but if you want to be a life insurance agent, you are going to have to pass a state test in whatever state you're in. You're going to have to pass a background check, get live scanned, the whole shebang. And you got to go through an online course, get that certification before you can go take your state exam or whatever for whatever state you're in. But we could talk about compensation and all that. Just if you're serious and you want to learn and you trying to make money and get to the next level, then just hit me up in the comments and we could go from there. But yeah, hit that like button, hit that subscribe button. I got a bunch of different other YouTube channels, so if you know who I am, go subscribe to all my other channels. I'm not even gonna say too much. I'm not sure what I'm gonna call this channel yet, but stay tuned, hit the subscribe button. We got a lot of work to do. This channel is basically gonna be about life insurance. Might do some infield and go out and show y'all how to get clients and things of that nature. So yeah, stay tuned, man. It's gonna be a ride. It's gonna be fun. So yeah, I'm gonna see y'all later.